And as always, if you have markets that you want me to look at, we can certainly do that. I have my list of markets over here on the right. We'll spend a good half hour or so together applying core strategy. Yeah, so just type any markets in the chat. Did anybody short the euro? Is anybody short the euro right now? I just got out of this trade here. Classic setup for us. All right, so if you don't have any markets you want to look at, let's dive in, and we'll start with the dollar. The dollar had a nice little demand zone below, so let's start with that. And remember, for any of those that are new, those of you that are new to the session, what we do here is we use a strategy that we created where we quantify the market's real supply and demand, and then we identify where those levels are in a price chart. Those ultimately are where market turning points are, because our goal with trading anything, short-term trading, longer-term investing, buying, selling, whatever, in any market, it all comes down to two things. Where are markets going to turn, and where are markets going to go? Right. So that's our goal here. Let's start with the dollar. And again, we'll just employ core strategy. Don't forget there's a nice big weekly supply zone above. Would certainly take some time for prices to get up there. But when we look at the smaller time frames, what I was noticing this morning, which is the reason for shorting the euro, is the presence of this demand zone below. So this tells me that the dollar is going to have a tough time getting below this level anytime soon. And the path of least resistance is higher. So with that, we want to look for shorting opportunities in the currencies, major currencies against the dollar. Okay. So we have this level below. We have a little supply that the dollar is going to start coming into now. This will slow the dollar down. So we're likely to get a pullback in the dollar. And now we're looking at a 5-minute chart. So we see that level below. Sorry about that. Let me do that. And there's kind of a little X-ray snapshot. So we do have more demand sitting down here. So let's look for some trades to set up for the next little bit here today. When we start with major currencies against the dollar, we click through, and let's go to the euro first. That trade has already happened, but maybe there's another one here. Let's see if we can find another one. Whoops. So if the euro backs up to the 120, right here, 112.20-ish area, this thing, that could be a nice opportunity for us. When I go down to a much smaller time frame, this is going to be a challenge, so we could probably short the euro up here, but I'd rather look for another market that is giving us a little more quality of a level. So we may find that with, let's keep looking here. Yeah, we're not, let me try one more here. And possibly the Canadian dollar. Yeah, we really need a pretty big move here. All right, so let's stick with the bigger time frames. Again, the trade has kind of already happened, so we'll need a bigger move. Euro's up here again in this area, likely to turn lower. Canadian dollar's up into this area. You know, they all have the same area. So the point is, again, with that dollar demand sitting just below, and major currencies against the dollar with these levels up here, there's that one. The euro's probably back up, or if the euro gets back up in here, that's what we want to do. Okay. Also with that dollar demand, dollar comes down, likely to go higher, or just, right? So we want to look for a possible shorting opportunity in oil, which I really like. Oil in the larger time frames is strongly suggesting it's going to move back down to the low 40s or upper 30s. Okay? Let's also look at gold. What markets does everybody trade here? If it's just spot FX, then we can focus on that. Or if it's mainly spot FX. And if it is spot FX, that's totally fine. We'll just focus on all those markets and some of the cross pairs. Okay, let's just go to spot FX then. We don't need to spend any time on the futures. Not a problem. Let's start with the euro. All right, so there's, you know, again, obviously basically the same chart. When we look at the larger time frames and the smaller time frames, and I'll blow this chart up here. I'm down to a 5-minute chart, and I can look at a 10-minute chart. I can look at a 2-minute chart. Basically, my point is you don't really have any significant demand until you come down to here. So there's a nice profit zone below current price, at least down to here. Okay, so we have that area below, and we're focused on short-term trading today. It doesn't mean we're always focused on short-term trading. All right, so all this stuff in between, there's really nothing in here, no significant demand or supply. Okay. So we want to play this. Zone. So if prices rally up to that supply, we can short for a move back to the downside. If prices hit the demand, we can buy for a move back to the upside. Our profit zone, ideally, should be less than what the market is offering. Okay? Meaning, whatever the profit zone is the distance between these two levels. Ideally, if you're following the strategy, you always want to take less than the available profit zone as your target. Let's go on. Let's move on. Let's look at the euro-yen. There's not a whole lot going on here at the moment. What I did want to point out, though, is I had this one on my radar this morning. Okay. There is an opportunity to, let me pull this up here. So we want to find our, again, at the end of the day, where are banks buying and where are banks selling? Oops, I didn't want to do that. Here, let's bring this down here. Okay, so we're using two different time frames to identify where those demand and supply zones are above and below current price. And there's that one. There's the demand zone below, there's the supply zone above. Okay, and it's totally fine to do that. These are larger time frames. So if you trade this market, and again, it's great to trade the spot forex market in the larger time frames. Some of these stops may seem a little too big, and that's okay. Just don't take the trade. Okay, but remember that one of the most challenging ways to trade is to be a really short-term trader in the spot FX market, just because of the way the market is designed. So if you can handle stops that are a little bit bigger, there's tons of great opportunity in these markets because these markets move. So we have a nice supply zone here, 123.25, all the way up to 40. And there's room all the way down to 121.20. Okay, makes sense? Any questions on that one? And this one just developed in the last 2 hours. A lot of times you might be sitting around, this has happened to me before, thinking, wow, you've just scanned all the markets, can't find anything to do. It's going to be days before a setup comes, and all of a sudden, it just takes one candle, and all of a sudden you've got this great opportunity in front of you. That's this one. So this just developed over the last hour. What we really like is that there's really no floor of demand right here. Because again, if you look, that's the picture of filled orders, right? You can, Carlos, but remember, it's all needs to be very rule-based. So in this circled area, remember, each time price comes down there, those pivot lows, that means the demand is being filled. The buy orders are being filled. The demand is being depleted. Okay? So we have the presence of fresh supply above, meaning unfilled sell orders, and filled buy orders below. So that means price is very likely to drop, not go up. $123.60. Let's see. 123.60. Yes, for sure. Rally, base, drop. We really like this one. This it's great. But you're going to hit this first. So that's why I went with that one, because it's closer to current price, and because you have this, these pivot lows down here, prices likely go down and through that area. All right, let's move on. There's some old lines we're dealing with here. Can't really get those lines. Here's an old level we put into, we actually put this in FX Street. Yeah, the small time frame profit zone, same thing. You're always looking for your opposing level. That helps you determine what the profit zone is, and then we always want to take a little bit less than that. Okay? So here's one from an FX Street session not too long ago. We're entering here, stop up here, and the target is the blue line. I don't know if any of you are in this, but that's the opportunity. And because we're close to supply and this trade's kind of just getting started, if we come down to our smaller time frames, like this one, let me get rid of this. Okay. Again, if you look below, in this area here, this was a nice demand zone, but price has already come back to it. And price has come back again and again. So the buy orders here are certainly not as significant as they were before. When we look above, we have a rally base drop and then a drop base drop. So let's take this and plan it out just like that other one in the yen. Okay. All right. So this level comes in right about 110.19 all the way up to 110.23. So you'd want your stop about 5 pips above that. Okay. And this one has a nice big profit zone. So this pivot low, there's probably some buy orders sitting right here. So let's put another target in. So here's where the buy orders are. Let's just put it here for right now. But let me show you how to do this. So to make it roll base, that's where your demand is, right? Coming out of this drop base rally. So whatever this available profit zone is, pick a number, and that becomes your target. Meaning, pick a number that makes this always rule based, the number that you can put in your trading plan. So make it a percentage. Make it like 80%, 85, 90%, 90, whatever, 92%, 84, whatever it is. It doesn't matter. What's more important is that you have a number. Okay. So let's just say we pick 90% of that, and let's just say that, and you can figure it out with your Fibonacci tools. But let's say that number is, that meets the target right here. Follow me? So just like that last trade we set up with entry, stop, target. And again here, we're just looking for about 5 pips above the level. And off we go. So I know this looks far, but this is only a 10-minute chart. This trade can meet entry in 5 minutes, 2 minutes. So you've got your bigger picture yen trade working down here. And we just need to sit tight and wait for this one. Well, let's keep going. Again, if you have a market that you want me to look at, just let me know. We're looking at the Canadian dollar. I'm not that interested because I always first look at the larger time frames. We're not necessarily coming into a big area here. But, I guess we are, but let's see. Let's go, let's get some perspective here. So what's causing me to want to just go on to another market? We do have some supply up here right around the 136 mark. So if we get there, absolutely. Looks like a great opportunity to sell short in this area. We also have a rally base drop sitting right above it. However, we're nowhere near that. And this market has been basing sideways for a month, for 4 weeks, meaning we're in a range. When price is in a range, I don't really have any interest in trading inside that range, because by definition, you can never have a big supply-demand imbalance inside a range. Okay? You can't. If you did, you wouldn't be in a range. So your significant supply-demand imbalances, which is your market turning points, are always going to be outside of that range. So you want to always take a quick look above the range and a quick look below the range. If you have any really good fresh levels sitting there, great. Here we just don't. So we move on. Okay, we're looking at the pound. Yeah, we can go to the pound yen, not a problem. Let's go to that one first. So weekly, we don't have a whole lot of information there, but the daily we sure do. So let's pop up the daily here. So I think you're probably thinking of shorting, right? Correct. Set your target before reaching that opposing level. Exactly. Just pick whatever number you want. You know, if your favorite number happens to be 12, make it 12% before the opposing level. I don't know. It doesn't matter. It's more important to have a number than what that number actually is. But now you'll see you'll dramatically improve your winning performance. So I don't know that we're that super close to a trade meeting entry in the next few minutes here. However, what's attractive about this market is you have 3 strong levels of supply sitting just above current price. You're sitting at 139 right now, but up around 142. If you should happen to get a rally back up there, and we can, it's possible. You have a little bit of demand here. Get a rally back up to 142, that's where your shorting opportunities start. All these levels here. And we don't just say that because there's supply there. We say that because there's supply there and there's a profit zone to the downside, meaning the demand below is filled or gone, at least down to 136. And I would fully expect this to go below 136 because we've been there already. There was demand here, especially if you go to a smaller time frame. But here, some of those buy orders were filled. Here, more of the buy orders were filled. That's why we expect prices to go below the 136. But anyway, nice big profit zone there, at least to get the trade started. So nice find on that market. Here's the dollar pound. I'm not going to spend any time here because the chart looks basically identical, right? Same action, same activity. Here we get a little bit better look at the demand, but it only supports, the conclusion we just came to. Okay, let's keep going. Here's the dollar Swiss. And I don't think I had much here other than there's a little day trading opportunity. I have it on my list. Pop this thing up, okay. Yeah, so right here, 97.04 will be our possible entry point. Kind of a big stop here. But yeah, I would expect this to turn lower right in this area. Yeah, I guess our risk reward here is not great because you're gonna have some demand down here. You can also, price is likely to stay between 97.04 and the 96.80 down here. So if you're short-term trading this market, that's what those are the expectations. Here's the Aussie dollar rallying back up to get closer and closer to supply. For this one, I want to go to the 4-hour chart and point your eye to some levels that look really good. Boy, spot forex for beginners, I see your question there. I probably wouldn't go below a 10-minute chart. If you're new, just be really careful. So there's 3 levels here sitting on top of each other that meet the criteria that we're looking for. So let's pick these top 2. Okay, there's that. Oops, there we go. So we're down to, so this is a 4-hour chart. This is not like right around the corner, but if prices get up here, this area has a very big profit zone. Okay, when I blow the chart up, you'll see below, it looks like there's some demand down here, but that's not demand. That would never meet the criteria of demand for us. Does that make sense? So watch these levels up here. Rally, base, drop. Another little bit of basing down here. Banks appear to be aggressive sellers up in this price range. We're not that far from it. Looks like a good opportunity. If we're following our rules and our criteria, that's a level we'd be interested in taking. Let's go back quickly and just review the dollar. Still moving higher. Let's see, why do we get stuck here? All right, so now we're back up into all this supply. So we do have more, now there's more demand zones below current price. This just supports, again, if you get a pullback in the dollar here, expect the dollar to rally, which means, again, we should, like we started the session with, look for opportunities to short the major currencies against the dollar, while this whole thing is going on. Does that make sense? Okay, good. Before I forget too, I'll pull up another chart. I just posted in the chat. I'm putting a lot of trading stuff on social media now to help you too, so we can meet more frequently. So there's the Facebook address. You can always search me there, and I'm going to start putting out trades almost every day. Okay, and let's look at another market here. Oh, let's go back to our euro. And small time frame. There we go. So see on the 10-minute chart here, there's room for the euro to come down to here. Now again, just full disclosure, I've already been in this trade. So, but there's room for the euro to come down to here. $1.1183. We also have some new supply sitting right here, 112, call it 03. So it's not the highest probability opportunity because price has fallen so far already. But if you took that first trade, or, I'd probably be okay taking this one too. And if it doesn't work out because it's lower odds, then I'd still be up quite a bit of profit for the day, even though your batting average would be 50-50. So, again, lower odds, but watch for a move from right in here to, the 112.03 down to around 111.85 or lower. Does that make sense? Okay. Again, it's a lower odds trade. So if you're not comfortable taking that, then just don't. Not a problem at all. Here's another one with a similar opportunity. This is the 5-minute. This is the euro against the Aussie dollar. Okay, there's another one. So again, if you look at the 5-minute chart here, I'm just focusing on the short-term opportunity. A little bit of rally up to here. You have room down to this. Again, neither of these are big profit zones or high probability, but I could easily see them working. It's one of those ones where if you're okay with the risk, if it's not a big deal, then you just do it. I'm looking for much bigger profit zones. Our next session together here in FX Street, we'll focus on the style that I employ myself more, which is focusing on bigger opportunities, meaning much bigger profit zones, and so on. Okay? So hopefully that was helpful. If you have any questions, you can always email me, or you can actually just post the question right there on social media, and we can go back and forth there. There's the Facebook address. Hopefully that was helpful, and yeah, anything I can do for you, just let me know. All right, have a great day, everybody.